You guys see me? Awesome. Okay, let me actually do this. Yes, can you guys see me?
Yes,
Can you
ma'am.
guys hear me?
Give me a bright yellow.
My bright yellow hat?
Yeah.
Yes, Pat.
Listen, my hat is everything. I love this hat. Okay, let's see. Let's do this real quick. Bear with me. Let me pull this up real quick.
Also, when Abby pulls up her screen and do all those things, you all are always free to. I had a student that was like, "Can I post about this?" And I'm like, "Yes, shout us out, shout her out." Her Instagram is the relationship accountant. Tag the Indom MBA, let them know that you're excited because we have like the best community and all that good stuff. It always helps us out. It helps her out. It helps you out. It helps people know that we're like, I'm not the only one talking up my own course, right? They're like, this girl really keeps talking about that damn course. But it helps to know that like, okay, she can't be lying.
Okay, so let's do this. And then I'll share. Definitely, you guys can post. You guys can post. We love posts here. We love posting here. Let's go here. Let me move you guys out the way. Got it. Okay, definitely. Can you guys see my screen?
Yes, ma'am.
All right, awesome. We're going to get started. All right, just a little bit, what do you call it, housekeeping rules. If it's okay with you guys, I prefer all questions to be after the presentation. And the only reason why is 90% of the time, your questions, I will answer them throughout the presentation. But if there's a question that you guys have, I'll be happy to answer it. Also, I'm from the island, just like Saba. We talk really fast. So I understand sometimes I can actually talk really fast. So I'm gonna do my best to actually slow it down because I'll start running with that mouth of mine. So I'll slow it down for you guys. All right, just to tell you guys a little bit about myself, I'm Abby Joseph. I'm the relationship accountant. I'm from the island of Haiti, but I was raised in Bradenton, Sarasota area. I am a divorced single mom. I have my bachelor's and master's in accounting. I'm raising a teenager that nobody wrote a book about. I would have read it 7 times. Fun fact about myself is I was a VP of a nonprofit organization named the LTSG Ministry, and I did missionary work for about 10 years. That's pretty much it about me. I am the CEO and founder of Serenity Financial Services. And what is it that I do? I help business owners and retail traders maximize their tax savings and minimize their tax liability. I also teach traders how to trade under a business instead of their social security number. So today, what are we going to discuss, right? The agenda is really, really simple today. We're going to learn tax planning versus tax paying. So when I thought about you guys, I was thinking about, okay, what is it that you guys are going through now? And also, what is it that you guys can do to also prep you guys throughout the year? So we're going to discuss tax planning versus tax paying. We're also going to discuss the top 5 strategies you can't really afford to miss out on. Now, the bonuses for tonight is your business setup, how it can affect you guys based on how you set up when it comes to your taxes, also your bookkeeping system, and how to actually develop one. Will also, another bonus that you guys be able to take advantage of is your bulletproof business. And what that pretty much is how not to be attracted to IRS when it comes to audit. All right. So these are the things we're going to discuss today. So here's what I recommend. Take a pen, take a piece of paper, and start actually digging and writing some notes. So let's break down. Yes.
I wanted to add this really, I guess this has something to do with it, but y'all, me and Abby are not that far away in age, like we're not that far, but Abby has known me since I was 5 years old, and we never saw this coming in a sense of like me being the boss lady, having never. So it's really awesome
Never,
to know that like not only was I raised alongside her, and I look up to her as like more than like a sister, right? And I can always go to her for that. But like now that she gets to collaborate with me in my business, and I get to also help her in her business. And so I think it just, that full circle moment right there is something that I'll always look forward to and always share, because like it literally, life happens so fast, and it could definitely happen for you.
oh, definitely. And you guys have to understand, Saba was my baby. I was her Sunday school teacher. When I tell people this story, I know they look at me like, well, how old is
They're
she?
like, yeah, they're like, wait. So what does that make
So,
you?
so with that, okay, so I'll give you a little hint, right? So I was ordained youth ministry at the age 15. So I was actually teaching in the church even at the age 15. My daughter's 17 years old now. So I have a 17-year-old and I was teaching at 15. So yes, Saba and I are not far from age, but yeah, I'm definitely much older than her.
Yeah, she don't let me talk to her any kind of way.
Yes, but yes, talk about just proud. Because I remember when Saba started school, I remember asking her, you know, what's your major? What's your degree? And so just to see where she's at, believe it or not, just like she said, no one would actually thought that, you know, I literally thought she was going to start, because I told her she was going to start a business in traveling. Because I was like, girl, you travel so much. You need to actually teach people how to travel with like $100. Because Saba be going to these places. I'd be like, how much money you spent? She'd be like, not a lot. I'd be like, listen, I need to know how to play this game this girl plays. But you're right, none of us would have known that we would be collaborating, and you would be where you are and I would be where I'm at.
Yeah,
So
absolutely.
so let's break down tax planning versus tax paying. So you may be asking, okay, what is the difference between tax planning and versus tax paying? So if you look at these two pictures, right, you will see that my beautiful lady over here with tax planning, she's super excited, and tax paying individuals not happy. The reason why is because it has everything to do with planning. Everything to do with planning. And what is the difference between those two? Well, one of those lady thought about taxation throughout the year, and the other individual thought about taxation in December or during tax season. What is tax planning? Tax planning is being able to project your end year net income by June, July. So if you're looking at June, July, you're looking at your financials, if you are able to project what your net income is, what you are able to do is you are able to plan. So when I say plan, what does that mean? So if I'm looking at a high net income, what am I planning for? So I'm going to be able to move my money into what? An SEP, 401k, IRA. If I'm looking at other investments such as real estate investment, okay,
Hey,
I'm
Abby,
looking at.
you may have to go over some of that.
I'm sorry, say that one more time.
It
Hello?
cut out for a little bit there.
Okay.
So you may have to go over, at least on my side. If everybody else was fine, it might just be my problem.
Oh, okay. So we said tax planning versus, thank you for that, Shirley. We said tax planning over tax paying. What is tax planning? Tax planning is being able to project what your net income is, right? What your balance sheet, your profit loss looks like by June, July, so then you can plan for the next 6 months. So if you can project what your net income is, one of the beautiful things that you'll be able to do, you'll know, you know, where we are moving money or where we need to actually cut costs at. So let's just say we have a high net income. So as your tax accountant, what conversation we're having? We're saying, okay, we need to move this money around, because not moving this money is going to put us at a high tax bracket, and then meaning we'll have to pay more taxes, right? So then what we want to do is lower that net income. We're going to move this money either to a SEP, to a 401k, to an IRA or Roth IRA, right? We're going to actually move this money. Or we may be talking about, okay, you need to make a purchase, Okay, what is that purchase? That may be, okay, we need to purchase supplies, you need to purchase a vehicle. So by being able to plan that in June, it gives you more power, it gives you control of your financing. What is tax paying? Tax paying is the individual that only think about taxation during tax season. This is why I tell people there's a difference between an accountant and a tax preparer. Tax paying individuals see a tax preparer. Tax planning actually has an accountant. That's the biggest difference. So it's so important that throughout the year, you are thinking about taxation, not only in December. Okay, so let's move on. So we did explain what is tax planning, and we also explained what is tax planning. Tax planning is year-long planning. So we're not only looking at December. Tax paying is literally December, okay? Once a year, pretty much, all right? We talked about that as well. So you should be talking to your accountant, your tax accountant about tax planning. I truly advise around June, July. Like all of our clients, we actually schedule their tax planning around June, July. We're pulling up their financial reports. We're looking at, okay, where do you need to cut costs at? If we're looking at a low net income, where do you need to cut costs at? Are you having too many employees? Are you spending too much money? Because one of the things that we find that even as a sole proprietor, even as a single member, LLC, you need to really balance out your expense, right? Because you are in business to make money. This is not a hobby. This is a business. So if we're not making money, then we're doing something wrong. So you want to make sure that around June, July, you want to be looking at, your financial reports to see, okay, am I making money here or am I not? What is my next goal as well too for the next 6 months? So that's another thing that tax planning does. It helps you pretty much prepare the goals that you set up for the year. It helps you to actually stay aligned with those goals. So I definitely say June, July, guys. Definitely. Yep, December is definitely too late for you to be talking about taxation. So now let's talk about the mistakes that I see business owners make. All right. One of the biggest mistakes that I see small business owners make is that they fail to plan. And the reason why that throughout this presentation, you'll hear me talk about planning, because it's the biggest issue as a business owner that you will actually face. Planning. And it's so funny because that's in all aspects of our life, right? Planning is very important. So you lose every time you spend after tax dollars that you could actually have been able to pre-tax. See, there's a difference between after tax and pre-tax. When you plan, you are able to actually pre-tax. And that is so, so, so important. So I don't want you guys to miss out. I want you guys to be able to take every advantage that you can pre-tax, not after tax. So the next subject that I really want us to talk about is the top 5 strategies that you cannot afford to miss out. And the reason why I want to go over those with you guys, because we are in February, right? I want you to start working on those strategies, all right? The strategy number 1 is maximizing your deduction. When I say maximizing your deduction, I want you to maximize your deduction to the point to where you question it. People are so afraid. A lot of business owners, what I find is that they're so afraid to maximize their tax deduction because they feel like, okay, maybe if I deduct so much, IRS it's going to be a red flag. No, if you are actually deducting everything ethically, then you have nothing to worry about. I want you to maximize your deduction. All right, but I do want you to remember this. Expenses must be both ordinary and necessary. Now, you may be wondering, okay, what is the difference between ordinary expense and necessary expense? Well, ordinary expense is when you have an expense, right, that is specific to the industry that you in. So you guys are VAs or virtual assistant. So should a virtual expenses go buy a truck to run a trucking company? That's not considered ordinary. So your expense need to be aligned with the industry you're in. So I am an accountant, right? It doesn't make any sense for me to go buy, for me to have an expense that is related to a hairdresser or that is related to an e-commerce business. So it needs to be ordinary. Necessary is pretty much necessity. So it doesn't necessarily have to be specific for the industry. So I need a desk. A desk can be for any type of business. So that's necessary. So that's the difference between ordinary and necessary. So what do I want you guys to do? I want you guys to track everything. All my clients know that if it's not written down, it didn't happen. So I want you guys to make sure that you track everything and you keep receipts of everything. I don't care if it's a piece of pen you purchase, you track it. People are so amazed that I say that I check my bank account 4 times a day. Why? Because banks makes mistakes. Anytime there's a human being behind anything, mistakes can be made. My account was hacked this week. If I was not used to be a type of person that checked their account 4 times a day, then I would know that my account was hacked, right? So you want to make sure you track everything. I want you guys to get creative too and strategize. So you might probably say, Abby, what do you mean by creative? Deduction wise, I want you to be creative. I want you to be like, okay, I'm going on vacation. We're going to make this vacation a business trip. Are we going to have fun at this vacation? Yes, but we're going to be creative enough to where we're going to add something that is aligned with our business to actually make some of these expense business related. So travel, when you guys travel, like with Saba, for an example, every single one of these traveling that she goes to needs to be some type of business expense. So what would Saba needs to do? Meet up with a client, talk about business. When the girls get around the table at dinner, talk about VA, talk about the in-demand VA, talk about the course, anything that is related to the business, and then track it, document it. That is a business trip. So I want you guys to be creative when it comes to your deductions, when it comes to tracking everything. The basic deductions, everyone already knows them. I want you guys to actually be able to deduct the things that no one else is thinking about. Okay, so home office and auto expense. You guys work from home, we're gonna get creative. I want everything that you guys are doing in that house, I want it to be some type of related to the business. Now, home office expense is very tricky, all right, guys? So there's no double dipping. You either can. Oh, I'm over here in the chat. I'm trying to make sure that you guys can hear me. So when it comes to home office expense, what I want you guys to do is what? I want you to get that cell phone under the business name, not your personal name. I want you to get that what do you call it, internet under the business name while we put it under the personal name. No, ma'am, we're not doing that. I want anything around the house that you are working with, I want it to be under the business name. I want you guys to get creative enough to where that if you are doing business 99.99% of the day, then I need 99.99% of the day to be a deduction. I am always working. I am working in my bed. I am working when I go to the bathroom. My cell phone is in my hand. I stay working. So guess what? 99.99% of every expense Abby have is a deduction. That's how creative I want you guys to do. Dining with others. I don't care if the lunch is with your mama, the lunch is with your daddy, the lunch with your kids. You guys start talking about business. That's how creative I want you guys to be. So when you guys go to dinner, I'm gonna give you guys a perfect example. So I'm in Eddie V's, right? And I'm having dinner with a good friend of mine. And someone passed by that knew me and they say, hey, Abby, how you doing? I'm doing great. Even though he was rude, right? But look how we're gonna switch the situation. He said, I have a question for you. I said, sure. What kind of question? This would happen to me in my business, blah, blah, blah. That dinner turned from personal to business. And guess what he did? Sign my receipt. Guess what I did? Dated that receipt. Guess what kind of transaction that was? Business. The personal got turned to a business. So that's how creative I want you guys to get, right? Retirement options. That's a huge deduction, guys. I want you guys, if you are sole proprietor or an LLC or an S Corp, we'll talk about that later. I want you guys to get creative enough, right? If you are working for yourself, that means there is a 9 to 5 that is not paying for your retirement. You're not getting a 401k from your 9 to 5 from that corporate world. If you leave this corporate world, I want you to know that you are responsible for your own retirement. So what do I want you to do? I'm going to need you to open a 401k. I'm going to need you to open an IRA. I'm going to need you to open an SEP, a SEP. And guess what? Deduction. One of the most beautiful deduction that I like, right? If you are an LLC and you elect as an S Corp, you can deduct up to $58,000 that you can put on a SEP. Prepare. So listen to this, up to 58,000, up to 58,000. I want you to continue to say up to 58,000. So here's what's going to happen, right? You are going to actually take at the end of the year, a percentage of what you make, you are going to put it towards your retirement. Listen, we're going to work smart, not hard, all right? And we're going to retire at an age where when we drive that nice car, we're not shaking. Okay, that's
That's very
listen,
important.
that is so very important. So very important. So if you do not have a 9 to 5 that is adding to a retirement, you need to actually start thinking about your retirement. And guess what? It's a deduction. So if I'm putting $50,000 a year towards my retirement and I'm deducting that $58,000, guess what it does? It lowers my net income. Guess what that lower that net income does? Lower me in a lower tax bracket, less taxes. We need to be, that word, creative and strategize. And that is so important for you guys. Meal expense. Remember what I told you guys? Every single meal, if I'm not cooking it for the family, and sometimes even for the family, it's a business expense. If I'm not cooking it at this house and it is not a family dinner, it is a business expense. If you ever see me at a restaurant, trust and believe it, it's a business expense. So traditionally, right, you are limited to 50% in the deduction. But with COVID relief changes for 21 and 2022, 100% of your deduction for food and beverages expense from the restaurant is a deduction. So why are you using your personal account? No. So as of tonight, you will not be using your personal account. You will be using your business account. Every time I see Saba somewhere eating, it better be her business account she's using. Well, I'm going to come to Dallas for her. All right. So what else that you guys can do? Listen, creative, guys. We have to be creative. Hire your kids. I don't care if they're 5, 6, 7 years old. You hire them. They're cleaning that kitchen. They're dusting your desk. Make them dust the desk. Make them dust the computer. Hire your kids. Now, remember this. You can actually pay your kids up to $12,550 tax-free. And they don't even have to actually file income for this. This is a deduction. All right. But know this, your children, if they are under 18, no need to withhold Social Security, Medicare, FUTA, etc. If you are operating as a sole proprietor or partnership or an LLC, you will need to do some homework around avoiding FICA. All right. So you must, the only thing is, I tell you guys, you must pay a reasonable rate to work performance. So a reasonable rate for my 7-year-old is going to be $12,000. So I don't know no 12-year-old out there or 7-year-old making $12,000 in a year. So that child has a nice job. Okay. Keep clear documentation of duties and time. So my nephew, right, who's 10 years old. All right, Cedric, I need you to clean my desk every other day. All right. And I need you to clean it at this time. So I'm keeping documentation, duties of the kids. So all the mamas in here, yep, all of you guys should be hiring your babies. I don't care if they, as long as they can walk and talk. Okay. And make sure you prepare W-2 for them at the end of the year. All right. And my favorite one is the Augusta rule. Remember this. Shift taxable income to tax-free personal income, right? So how does that work, Abby? You rent your personal home for up to 14 days, not taxable. There's no taxable. So guess what Saba's gonna do when I come visit her in Dallas? She's gonna rent me her home for 14 days. I don't know if I'm gonna be there for 14 days though, boo. But she's gonna rent me her spot for 14 days, right? And it's taxable. It's not taxable. So you can actually rent your personal home for up to 14 days, not taxable, but it must be a reasonable rate. So don't come in here doing no $50,000, right, to rent your home. It's not how it works, all right? Other things that you can do, corporate or team meetings, client stay. So when I go to go visit Saba, right, well, she's gonna consider that a client stay. A client stay. And all she has to do is document that I stayed there for 14 days. Creative, guys. I want you guys to be creative. All right. So 5 is the S Corp. Now, the majority of you guys are probably LLC sole proprietor, right? So what is the biggest difference? I say in LLC, you are taxed twice. You are taxed for self-employment tax and federal tax. Self-employment tax is 15.3. Federal tax, depending on where you are in a tax bracket. So you could be looking at a 37% tax bracket, right? With an LLC sole proprietor. So here's what I'm saying, or here's what I'm recommending. Once you start hitting $50,000, $60,000 a year, what you want to do is you want to make sure that your tax accountant, you're going to call your tax accountant, you're going to say, listen, I want you to elect me as an S Corp. So what that means is that you'll still be an LLC, but you are going to be elected as an S Corp, and that is Form 2553. So if your tax accountant doesn't know what the form is, tell them. Your tax accountant probably look like, oh, she knows what she's talking about. Yeah, that's what you want to make sure you know what you're talking about. So you want to tell them, I would like to elect as an S Corp. They will complete Form 2553 for you, right? So what that pretty much is saying that IRS, I'm an LLC, but I want you to tax me as an S Corp. Right? So then being taxed as an S Corp, what it does is it eliminates self-employment tax, that 15.3, it eliminates it. So you're not taxing the distribution. The entity itself is not taxed. But the thing is, with an S Corp, you have to take payroll. I'm gonna say it again. You have to take payroll, because what I do see all over social media is get an S Corp, get an S Corp, get an S Corp, but nobody is actually telling these people what the requirements are. You have to take payroll, all right? And it has to be a reasonable amount, all right? So what you cannot do is be making $200,000, $500,000, right? And be taking a $10,000 or $5,000 payroll. No, it needs to be a reasonable amount. All right. So your main goal is to reduce the self-employment tax, which we said was the 15.3. And also do not try to do this yourself. Consult your tax professional first. All right. All right. Next slide. All right. So more about S Corp. Here's what I love about S Corp. One of the things that I loved about S Corp is that it opens doors of opportunity for you. Opportunity for retirement. If you don't have any health insurance because you're not in the corporate world, you pay in your own health insurance, you can actually get health insurance through your S Corp. The business pays for it. It's a deduction. So one, ensure you have a reasonable salary, like I said, paid for health insurance for yourself, ensure you are treating properly with the S Corp, expense on business return, include on a W-2, you get deductions on a personal return, okay? Another thing is up to 12 months less payment, rent, insurance, prepaid expense using the IRS Safe Harbor, guys. One of the beautiful things I like about the S Corp too, like say for an example, you have a high net income, right? And you want to bill a client. So what I would have my clients do is not bill them in December. So if you have a client that's always late in making their payment, right? Don't bill them in December, bill them in January. So we can lower that net income. If you bill them in January, most likely they'll pay you right in January. So that will be considered income for the next year. That's one of the things that you can do, right? You buy your office equipment, bonus depreciation in section 179 expense. So anything that is $2,500 or more, you can depreciate. If it's $2,500 or less, we can deduct. All right, use your business credit card. Make sure though they're not that high interest thing. Because another thing that I keep hearing about is get these credit cards, get these business credit cards, get these credit cards. I'm like, are we just screaming for people to be in debt? So really, really be careful about social media and all this. I know you guys are individuals that are good stewards. You guys are not just gonna be in social media, just hearing all these people that are not qualified to even be saying what they're saying. But because 700,000 people are following them, people want to listen to them. All right, so be careful with all this. Get your credit card, get a credit card, get a credit card, and then go buy a car. Get a credit card and then do this. Go purchase a vehicle under the business, but they didn't tell you your insurance needs to be under the business. They didn't tell you it needs to be financed under the business. They didn't tell you that business insurances are more expensive. They didn't tell you none of those stuff. They're just saying get. So be very careful about all those. Exactly. It sounds like getting an accountant, Shira. It's just I just want you guys to really, really be careful about the noise that is in social media that keeps saying get. So be careful out there with all of that, okay? So what else did we talk about? Okay, now remember, when it comes to your S Corp, right? Two main points that I want you guys to know. You need to file a separate return. It's a two returns that you'll be completing, right? You'll be completing the business return and a personal return. So your business return is an 1120S. Once you complete the 1120S, it's going to create a K1. You will take that K1 to complete your personal return, right? So that's the biggest thing. With an LLC, it's pretty much your 1040 with a Schedule C. All right. So with the S Corp, you do need to run an actual W-2 payroll. We use ADP in our firm for payroll purposes. All right. So we went over that. All right. Designing your bookkeeping system is so important, guys. So what do I mean by designing your bookkeeping system? There's a difference between a hobby and a business. The biggest difference that comes in between if you are running a hobby, if you're running a business, is your books. IRS specifically says, if you do not keep records, if you do not have financial report, if you cannot pull a profit and loss or a balance sheet, you're not running a business, you're running a hobby. So it's very important. I don't care if it is not a cloud-based bookkeeping, if it is manually in a spreadsheet, as long as you're keeping records, right, is very important. So designing a bookkeeping system is the most important aspect of your business, right? And why do I say that, Abby? I say that because it is pretty much the bone. Your books is the backbone of your business. If I ask how many of you guys in here? 11. If I ask you right now, what is the most expensive item in your P&L? Can you tell me? If you can't, you're not running a business. If I ask you, what is the assets in your balance sheet right now? Can you tell me? You're not running a business. What are the liabilities in your financial report? Can't tell me? You're not running a business. What is your net income? Are we looking at a high net income? Should we be cutting costs or should we be moving money? If you can't answer those questions, you're not running a business, you're running a hobby. So really identify what it is that you're doing. It's going to make a big difference how you grow in this business, okay? So your books is the backbone of your business, guys. Here are my bookkeeping tips that I have for you guys. Utilize a cloud technology book. I recommend either Xero or QuickBooks Online. Keep your books current. What I mean by that is your books should be reconciled, clean. All your expenses should be whatchamacallit, on a monthly base. So now, if you don't have a lot of transaction, I don't mind if you actually cleaning your books on a quarterly base. But I highly recommend that it needs to be monthly. Here's why I ask. If you don't know how your business is doing on a monthly base, isn't that a problem? You want to wait 3 months to know that whatever it is you're doing is not working, or you want to know this month? I like to know this month. And I think you would like to know too immediately if whatever it is you're doing, whatever strategy you're doing in your business, if it's not working. If you're waiting for 3 months, then it's going to take you another 3 months to fix it. So you want to actually do that on a monthly basis. Utilize the data, right? By keeping your books, it helps you set your goal. It helps you set up what your goals are. Your books is kind of like the face of your business. I can actually literally look at somebody's financial report and don't even really know anything about the business, and I could tell you if this business is going to last 5 years or not, just by looking at the financial report, just looking up the P&L and the balance sheet. And that's what you want to be able to do. You want to be able to look at your financial report and know where your business stands. So it helps with goal setting, planning, your tax estimates, like your quarterly estimated tax, your books, growth or downsizing. I had a client last week that I told to close their business. Why? Because for the last 3 to 4 years, the business there's no growth, right? So there's no growth. If you are spending money out of your pocket to keep a business running, you need to close that business. It's no longer a business, it's a hobby. All right. So you want to make sure that you keep your books up to date to the point where you know, right, on a monthly basis, do I need to cut costs? You know, do I need to reinforce whatever it is that I'm doing that is working, or should I stop? So that's very, very important, guys. All right. Now we talked about your books. We talked about the tax saving strategies. I wanted to talk about audits, IRS audits, how to stay away from IRS audit. As you getting creative with your deduction, you want to make sure too you're not sending red flags, right? What is the best way to do that, Abby? Right? In order to have a clean set of financial, there are some few rules that you must follow. Have a separate bank account and credit card. You'll be amazed how many people that I see that are running a business, right? And they're using their personal card for business, they're using their business card for personal. No, you have to respect the entity, guys. If you don't respect your business not going to respect you. You have to understand you work for your business. So every month or every 2 weeks, my business pays me, because the business itself has to be able to stand its own. Yes, as a VA, as a virtual assistant, you're running an entity. You have to respect that entity. So do not mix business and personal. Now, occasionally that can happen, right? I don't have my business card and I need this item. So then what I would probably provide you guys with is an accountable plan. So then the business now needs to reimburse you. So let's just say I use my personal card for a business item. When I get home, I'm transferring that money from the business to my personal account, because my business now needs to reimburse me because I used my money to service my business. And it's very important that you guys respect the entity. No personal expense on your business bank account. Listen, write it in a sticky note and put it right by your laptop, because I know how hard it is to do that. I've been seeing Macy's in business accounts. You know, I had a client who took her whole family to Disney and used a business card and wanted to sit here and argue with me how this was a business expense. Disney? So who in Disney did you met to have a business meeting at? It better be Disney himself. No, ma'am. No, ma'am. We're not doing that. Respect the entity. So like I said, in rare occasion that you can accidentally put a personal expense on a business account, categorize it as owner's draw, okay? Or reimburse yourself, okay? You want to keep your receipts. okay? Store them in a file in your office or take a picture of them and store them in a cloud. That is virtually important in the event of an audit. Now, when it comes to receipt, I'm gonna give you a good example. I love using an example. So let's just say I went to Shell gas station, right? I put $60 gas in my car. And then I went inside and I purchased a pack of beer for $20. How much money did I spend? $80. My bank statement is gonna show that I spent $80 at Shell. My receipt is going to show that I spent $60 for gas, which is a business expense, but my beer was not a business expense. So your bank statements, okay, your bank statements are not financial reports, guys. Your bank statements, you can repeat it after me because everybody always think, oh, my bank statement shows all my business expense. No, it shows transactions. Bank statements are transactions. They're not financial reports. There's a huge difference, okay? So it's important to keep your receipts.
Abby, believe it or not, it's with where I am in business, and last year, believe it or not, I had a CPA tell me, which unacceptable, right? Told me that, girl, you don't have to keep receipts. Like, they don't do that no more. You could just use the statement. And I was like, I knew right away, but I was like trying to see if she was gonna come around and give me like an alternative in the sense of like, I don't need the paper ones. I could just take a picture of it and upload it into a platform. But no, she legit stopped at that. You don't need, people don't do that no more. They don't. I was like, I don't have to file them anywhere. And she's like, no, people don't do that. This is when I first started. And I'm like, something is not right, because how I could buy anything and say it was for the business, and how would I prove that? And she's like, no, where you're at, you don't have to do that. And I'm like, how could you be a CPA lying?
And it's so funny. You know what? I love my colleagues, but you have to understand everyone's level of what is right and what is wrong is different, right? Believe it or not. So yeah, an average account will tell you, you don't need to keep receipts, right? There's no need. I have the bank statements. That's no problem. And then you get audited, right? Remember, it is not your accountant that got audited. You got audited. You are responsible for your books. You are responsible for your books. You are responsible for your books, not your account. So when you get your audit, it does not have your accountant name in it. It has your name and your business EIN number. So that's why I tell people it's so important for you to stay up to understanding, know your numbers. Just because someone said they have a CPA, or I want you to challenge me. I want you to say to me, Abby, we shouldn't do this. I want you to ask a question. I am very transparent, guys. And I don't even mind being wrong, because you know what? I'm a human being. I know even as an accountant, accountants make mistakes. If you guys follow me on Instagram, you will see in one of my videos, I talk about how accountants make mistakes. And some of them don't intentionally make mistakes. We are human beings, just like banks makes mistakes. For those people that truly believe in these banks, I feel sorry for you. Banks make mistakes because there's a human being behind it. Even if there was a robot, robots make mistakes too. Whoever programmed them probably didn't program it right. Just saying. Just you are responsible for you and your business, guys. So yes, this account right here, believe in receipts, and we'll always believe in receipt. And that's why I gave you guys that example of Shell. So your bank statement shows that you spent $80 at Shell gas station, but the whole $80 was not business expense. Only $60 of it was. So your bank statement was not. So then now the accountant, right, is going to put under vehicle, right, expense or gas expense, $80. Was that book correct? Was that journal entry correct? No, that journal entry was incorrect. She spent $60, not $80. Because when IRS look at that receipts and it says $20 for beer, IRS gonna be like, beer now is a gas expense? Exactly. Take notes, guys. Ooh, this one is my favorite. Ditch the cash. Do not use cash. Cash is like my enemy and my lover at the same time. I love cash because cash is cash, right? But when it comes to your books, cash is your enemy. Why? Because it's hard to trace cash. So Saba went to the ATM. She took $200, right? That $200, she went to the dollar store. She spent $25. How much is left? See, I can't even count. 75? Yeah, $75. So now she went to Walmart, right? She spent $30. How much she have left? Whatever amount. Can't count. Even the accountant can't count. Now she passed by McDonald's, right? She's like, I want a Big Mac. Which you should, don't eat that mess, okay? Don't die. You're trying to die. So she go to McDonald's, she spent $20 again. I'm going to need every receipt for the whole day until she spent the whole $200. It's hard to trace cash. Now she got home, right? There's 20 bucks left out of that $200. Her husband, right? Or her husband takes the $20. Now I'm going to come back to her. I said, well, your receipts is missing $20. And then she's gonna say, oops, I forgot. My husband had took the last $20. Ditch the cash. It's where even that cash is your only payment option. Be sure to give receipts so you can properly document the business expense. But I say ditch the cash because, listen, it's hard to trace cash, guys. It's very hard to trace cash. So stay away from cash. All right. The system for you guys, the system for you is having an accountant that is aligned, not just any type of accountant, but having an accountant that is transparent, having an accountant that believes in ethic, and having an accountant that wants to build a relationship with you. The reason why it's so funny, people always say, you're the relationship accountant. Are you some psychiatrist or something? I was like, no, I believe in relationship over transaction. I believe our world is becoming a transaction world instead of service. So I believe in building a relationship with all of my clients. I can help you manage your bookkeeping, tax planning, and your end year tax return. And that's what I want to do for you guys as VAs. I want you guys to be able to grow your business, okay? I want you guys to hit that 1 million. And do not think you can't. I don't see why not. But in order for you to actually do that, one, you have to structure your business correctly, right? Two, you need to actually keep record. Three, you need to plan. And if you're doing those three things, there's no need for you not to be successful. No need for you not to be successful. All right. So talk to me. Let's answer some questions.
So there were a few questions in the chat. You might have to scroll all the way up. Let me see.
Okay. All right, I'm gonna answer. I think there's one here that says, so some of us just starting who don't have a registered business as yet, can we take the same advice being an independent contractor? Yes, yes, ma'am. The day someone said to me, at what point should I hire an accountant? The day you decided to open a business. So yes, yes, you can. Is it Kristen? Kristen? Oh, I'm gonna butcher your name.
It's okay. It's Chris Owen.
Chris Owen. Okay, do I have to wait for my client to send me a 1099 before I file my taxes? Yes. If you did provide your client a W-9, your client was supposed to, your client had until January 31st to complete those 1099s and send one to you. I have filled out a W-9 and I don't know what happened next. What happened is, yes, they're supposed to send you a W-9. Once you receive your W-9, I hope you kept all of your receipts and all your expense, so then that you can complete your tax return and you would be completing it on a Schedule C.
So one question was from, I think it was from Sherva about expensing. And so what about like a brand photo shoot? You know, you're getting a brand photo shoot from your business. Is that a business expense? Because
Oh, yeah, you were talking about hair, like we can't just take the hair, but I'm like, well, what if it's all for like a brand photo shoot?
I business expense my knotless braids and they were $400. So
Biggest question when wanting to identify if a service is for business or personal, you want to ask yourself this question: was this for the business or was this for me? If you can answer that question, then that answers your business and personal question. Does that make sense? So the photo shoot, was this for me or was this for the business?
Gotcha.
The photo shoot was for the business. The knowledge braids were for me because I was traveling after the photo shoot and I wasn't trying to do my hair. But my
if
audience
you were
loves the braids,
audited, they
right? Can I be like, like they love me in braids, IRS, like that's
But if you use the pictures on your, like literally in your branding, it's posted, it's,
No. So listen, guys, so that expense goes under advertising, right? Marketing and advertising. So know that if that expense that you spend was business related, then it goes under advertising
Gotcha.
for and advertising / marketing. Okay, did I miss any other question? I only got 1099 for my 6 total clients. Do the rest have to provide? Yes, ma'am. Every single client that provided you a W-9 needs to provide you a 1099 by law.
And
But-
sorry, I had a quick question as well. Thank you so much for your time. So she sent me a W-9 maybe 2 weeks ago. So sometime in like towards the end of January, but I haven't gotten the 1099 yet. And I think we're supposed to file like quarterly. So I'm just wondering what happens if it comes in after the deadline.
Okay, so that means she's late.
Okay.
Okay, so she's pretty much late, so she would be paying the fee because she has to file those 1099. So IRS is going to charge her an interest and penalty fee for filing it late, and then she has to send it to you. So she's filing it late. That's all that
Okay.
means.
And so basically a 1099 is just her confirming she paid me X amount, and then I put that as well saying I got that. Okay. Thank you.
Yes, ma'am. So IRS will receive that 1099 from her, right?
Mhm.
So then when you file your return, it needs to be aligned with your return.
Okay, and then when I file this time, I still have a W-2 from my full-time job. Is there anything we need to keep in mind if we're filing W-2s and 1099s at the same time?
You want to make sure that you're allocating your expenses. You want to make sure that you have either a spreadsheet or you keeping books of your expense.
Okay, thank you.
Next question.
Helena asked, how do I do my home office as a business expense?
Your home office, so you have 2 options. One option is you can do the square foot, right? IRS give you up to 300 square foot for office expense. So, and then there is indirect or direct or indirect expense. So then say your home, right? You have interest that you pay in the property, taxes that you pay in the property, those are indirect, right? But let's just say your internet expense, that's direct. So that you can deduct your cell phone, those you can deduct. What else in the house, right? Your electric bill, that's indirect. So those you get a percentage on, right? So those are expenses from home office that you can use.
Yeah, I don't think that mortgage is a business expense because you don't actually have to live in that home, right? And it's not the entire mortgage, it's where your office is. I learned that as well. Like I was like, oh, so I could just write off all my rent, and they were like, you don't use all the house.
Correct. So it's a square
And
foot.
that wouldn't be fair. Yeah. So you there's a portion of it that goes to an expense. Yeah, girl, I already asked. Look, everyone who owns a business has asked that question. So don't trust me, ain't nothing wrong with it. If I could write off my lashes and my nails and the groceries and everything that happens in the corner of this room, I would. Chrisone says, so what if I have an unfinished basement and I want to make that into an office, the renovation?
If you want to actually make the renovation itself as a business expense, then that's a little bit different because then you would actually have to rent the basement to the business. And the income, right, would actually be your personal income. and the expense would be the business expense. Does that make sense?
Yes, it makes sense. But so it can be done because the basement is unfinished. We never did it since we moved in, but there will be no other place in the home to be an office besides that. So we could make it
You
into a
can,
space.
you can, but I just want you to know that you have to rent. You actually would provide a 1099. The business would provide a 1099 to you.
Okay,
So I want you to know, because what happens is that people want to take the expense, but they don't understand that it's also income for you.
okay.
So I just need you to know that as
So
well.
the business would have to provide me a 1099. So technically,
Because you are
I will be
renting.
renting the space to the business.
You can do that.
And that's the only way that I could get it covered to get it big and all that if I do it that way.
Yes.
Okay.
Do y'all have any questions? Any other questions? If not, we'll wrap it up. Abby is here. And honestly speaking, I've dealt with a few accountants, I've dealt with a few CFOs, I have a CFO, and this was really good. This was really, really, really good. And I wish, like prior to having, like prior to going the CFO route, that I would have had someone like Abby. And this is not because I know her, but I learned a lot that I learned later on, too late in a sense, about expenses and stuff like that. And I paid a hefty tax bill last year that just looking at this, I'm like, wow, I overpaid. I could have been an S Corp last year. I'm now an S Corp, and so I lost so much money.
So because you were paying
I
double
was
tax.
in a whole lot of double taxes. Like it was
Yeah.
insane. And so even if
Yeah.
you don't have a course, I don't want you to think, well, I'm not like Saba, and so I don't need an accountant. And I got the accountant way late, right? And the money that I put out afterwards because I was late hurt me so much. Still does. I still have like PTSD from it, because it's just like, I wish, even as a beginner, at least book a call, at least get an understanding on your personal business and have a professional walk you through what needs to be done, right? Believe it or not, in 2020, I have 0 receipts to show. So if IRS wanted to come back and say, hey, so all that money that you made in 2020, let's see those expenses. I have nothing to show because somebody told me that. And so Abby is legit. She's legit, and she's a personable person, and she really truly cares. She comes from a faith background, so that's exactly where that comes from, and that she's not in the business to just make money, right? But she's in the business to let you know, like, to maximize, right? And to let you know that, like, business should be fun, it should be profitable, but it should be honest as well. Because the IRS goes after people like you and I. They don't go after Donald Trump. They don't.
Nope.
He's the last person to get taxed, right? You'll be long
I
gone.
tell people that rich people don't pay tax. So you may say, okay, Abby, what do I want you to do? I want you to go make this money. Rich people don't pay tax. Why don't they pay tax? Because they know all the loopholes. Creativity. Be creative about your deduction. Know all the loopholes.
Yeah. So even
Or
if
know
you're not
somebody who knows
sure,
the loopholes.
yeah. If
And
you're
know
not
someone
sure,
that knows who the loophole.
yeah, if you're not sure, definitely chat with Abby,
Yes.
get on her team and just get some insight on your business, and then go from there, because she's legit. And like I said, I wish I had this to provide to you early on, or to all my past students early on who watch the replay and all that good stuff. But it's very, very important to get professional advice when it comes to making money, because you just never know. I didn't know I was going to blow up. I didn't know that I was going to be where I am today. And I didn't know those things. And had I did, I would have pocketed a lot more. And I wouldn't have been finessed out of a lot. So I'm super thankful that you came and chatted with the students. And believe it or not, Sherva is on Sherva is a student of mine, past student of mine, and she's also on Abby's team, which is awesome, right? That I got to be able to connect her with that student. And so that, there you go, that's an opportunity that happened through the Indom MBA. So I'm really excited for that. And like I said, never think that, I want you to get out of the mentality of like, I'm just a small business. If you're just a small business, you'll stay a small business, right? You're muted, Abby.
I don't like that term. You are a business owner, period. You're not a
Yeah.
small business. So, and it's so funny, even when you go to my website, you will see that I have starter, entrepreneurs, and CEO. My goals is to take you as a starter, right? And pivot you to an entrepreneur level. And from an entrepreneur level to pivot you to a CEO level, right? They all have their time, they all have their process, but you're not a small business, you're a business owner. Don't even use that term. I don't even like that term. Small.
Yeah, yeah. It's definitely, it's not the right term to use because
No, ma'am.
you'll reframe it in your mind and you'll stay that way. If you're small, you'll always be small. But I want you to think that like you don't have to look at my situation and say, oh well, I'm not her, so I don't think I'm there yet, right? It's like the people who don't get their back end ready. You don't have any systems in place, and then you go viral on Instagram and you have 100 clients knocking on your door and you're like, wow, well, I wasn't there, but I wish I was ready for it. So I want you to stay ready and start thinking of going a professional route when it comes to managing your money, because you just never know. You could book 3 clients next week, and are you ready to expense what you need to expense so that you maximize your money? You want to be certain of that. So again, thank you so much, Abby, for
Thank you
joining
so
them
much.
and being so
I am
insightful.
literally leaving you guys and going to Clubhouse because I have another webinar. So I just want to say thank you guys for the opportunity. Know that you guys enter into the business world, right? And you guys are going to be successful business owners. Start writing these things
Claim it.
down and manifest them.
I love that. Yeah, I love that a lot. Like we're faith based, and so we believe that like if you can manifest it and you attach some work to it, and it's already done. So I want you all to definitely look out for that. Definitely follow Abby on Instagram at The Relationship Accountant and chat with her. She's super friendly in her DMs. She'll get you squared
Yes.
away. If she's not the best fit for you, again, we're not in a business to just maximize off of you. Like that's not what we're here for. But if she's not the best fit, or I'm not the best fit, or whatever, she will point you in the right direction for your specific situation. So again, thank you so much. I will be posting
Thank
this
you.
replay tomorrow. And yeah, enjoy your webinar inside of Clubhouse. And again, thank you.
Thank you, guys. I will see you guys again. Hopefully it's not the last time. And if you guys have any questions, just visit my website. Sherva did an amazing job. She put a spreadsheet that is available for you guys. Listen, your feedback is everything to me. So please, 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 if there's anything that you can do for me, please send me a feedback. You guys
Yes.
have an amazing evening.
All right. Thank you.
Thank you.